Welcome everyone to another special story trading event. This is going to be Greg Fisher's first VIP pick, and it's an exciting afternoon because it looks like it's GameStop 2.0. So after Greg's event, we're going to turn off the recording and we'll go into our happy hour and maybe we'll discuss a little bit about that. So let's get started. Before we get started, just a little overview of what story trading is. Story trading is an investor network where we aim to beat Wall Street insiders at their own game through crowdsourced collaboration, which results in an understanding of the story behind the trade. And we also give access to management with our VIP events for an extra edge. We are building our own app with lots of exciting features, and we're planning for a July release of that app. So quick agenda, we'll go over a little performance review of how our featured presentations have done to date, then we'll get into Greg's pick, go over the upcoming schedule, and then again, we'll go into our happy hour after that. So quick disclaimer, Story Trading is not an investment advisor, and that covers Greg and all of our guests as well. Investing in securities involves significant risk of loss, and this event is being recorded. It's going to be embargoed for a 7-day period, so our paid subscribers can get a chance to act on the information first. Now, our featured presentations, you can actually go to our website, storytrading.com, click on that performance tab up there. And when you do, you'll be taken to this screen over here, where you can see the performance of our featured presenters. All of these are still open picks. Down here, we have some of the picks that have been closed, and you can see the performance is unreal. 72% over 146 days. Actually, this is not coming up, but I don't know why it's black. But we have, there it is. That's compared to Kathy Ark's 50% over the same period. And you can see the performance today up 2.95% compared to QQQ and compared to down on RK. Here in the second tab, return by presenter, you can see who's been doing the best. Dan Carlson has the best average return, but we also have an annualized number here. This is not to imply that you'll actually get this return if you hold the stock for a full year, but it is representative of the timing of the presenters. Aaron Warwick has been doing the best, close to 300%, because his picks move shortly after he presents them. All right, with that performance review out of the way, we're going to pass it over to Greg Fisher to talk about this new company he found, Mace Security, ticker symbol MACE. Greg, the floor is yours.
Thanks, Ben. Just a quick introduction. I joined Story Trading sometime last summer, and I should mention I'm joined today by, I guess, my chief risk officer. He lets me buy whatever I want, and has made some pretty good picks in Chewy and BarkBox, so he's a valued member of the team. I've been invested in Mace since last June, I think the first trading day of June during the social unrest. I initially bought it as a part of a basket along with Smith & Wesson, Ruger, VSTO, and a couple of others. Over the next couple of weeks, I spent time digging into each of them and came away, really liking Smith & Wesson and Mace. And my affinity for Mace has only grown over time. And I'll share a little bit more today here why that's the case. I was sort of a last minute replacement for the KMPH presentation, so I don't have a formal presentation pulled together, but I do have some notes drawn up, and I've got some pages and slides that I'll share with you. So with that out of the way, I'll share my screen now. Can everyone see?
Yep.
All right, and I'll do a quick disclaimer myself. I'm not a financial advisor. It's not a recommendation to buy or sell. I do currently own Mace shares. I don't have any current plans to sell my shares at this price level, but I actively manage my portfolio, and I may buy or sell at any time. And in a nod to Keith Gill here, I'm not a cat or a dog, and I like the stock. Quick overview, it's a ubiquitous brand. It is Mace. When you talk about getting pepper sprayed, being maced is probably used just as often. So they sell pepper spray, pepper gel, stun guns, personal alarms, bear spray. They sell primarily through brick and mortar, but they're growing their e-commerce presence, including Amazon and their own website. They Hired a new CEO January 2019 with a pretty big agenda to turn the company around. They have been successful, in my opinion, in doing so far, and I expect continued success. They sort of position the business to focus on them being a consumer branded business with packaging that pops, and I'll share some of that. I'll share some of those pictures here with you. They've got their brick and mortar strategies focused on expanding the number of retailers that they sell into, adding products in existing retailers, and they are working to create a personal safety category inside retailers. So you would have maybe a small section by the register or an aisle in an auto parts store that has pepper spray, pepper gel, a personal alarm, and perhaps a stun gun if it's legal to sell. And a couple financial highlights. Last time I checked, the market cap is $27 million. They have less than $1 million in debt. Their tangible book value is about $4.4 million. And their Q3 unadjusted net income was $682,000. I think the adjusted was about $800,000. So, if you were to annualize that, you're looking at something that's trading at a little less than 10 times earnings. Why I'm invested? I like the upside to downside risk reward ratio. I think it's relatively undiscovered, and I'll share a little bit more about that. Earnings and cash flow positive. It's on OTC. It's OTCQB. I always forget which one's the highest rated one. I think it's the B. That's the one that they're in. And I think it has a very low risk or ruin, or very low risk of ruin and material upside. I think they'll grow top line revenue, and I think they'll also improve gross margins and their sort of fixed expense base. But even if it doesn't, the model that I've built says that it's undervalued. Even if they don't repeat Q3, I think it's still worth a little bit more than it's trading at. I really like the management. That's a really important part of the reason I invest in companies. They're pretty transparent for an OTC security. Their website, the investor relations page, has documents going back to I think like 2004, 2006. So they're not. My experience is they're not hiding anything. So far, management has told us what they're going to do, and then they've gone out and done it. There's still a lot of work to do, but so far, and I've sort of been checklisting them against a few things because trust and management is really important to me. They give very detailed answers in earnings Q&A, and in my experience, somebody that's able to speak in that level of detail off the cuff is not hiding something, or and in my opinion, they are in some ways under-promising. It's got high insider ownership. When it was last disclosed, I think in June or July, it was 28.3%. Their executive chairman owns a vast majority of that. The company that he works for invested in Mace a few years ago. And the other reason I'm invested is, I sort of look at it as being priced like a call option with zero theta bleed. It's got, in my opinion, it has, for me, low downside, and I think it has upside given both management's execution, but also, what I consider to be relatively low penetration levels in personal safety. We've all talked about how much guns and ammo are selling off the shelves given the social unrest last summer, and people continue to be concerned. Crime is still up in a lot of places, and some of the informal polling that I've done and some of the statistics that I've seen, very few people carry pepper spray, pepper gel. I don't think this is something that a majority of Americans are going to carry, but I think over time that will probably more people will probably be buying it than not. And because it does have a shelf life, you have to replace it after a couple of years, and so there's somewhat of a recurring revenue stream. I tried to put together a couple of thoughts to tie this into the 4 pillars. So fundamentals, turnarounds underway, profitable free cash flow generated with low debt. Management has plans to grow organically and at the right time via acquisition. They've been asked about acquisitions on a couple of conference calls, and management, and I like this, management has said, at the right time. We got to focus on execution now, and then we'll get to acquisitions. And the next point really ties into that. They have I think it's 56, but it's an over $50 million NOL, less than 8 million of which expires by the end of 2022. And so everything they make is going to flow to the bottom line. I'll go through the charts here on the technical side. Potential catalysts. Earnings and continued performance is always a catalyst. Q4 is typically a slower quarter for them. In Q3 was a huge quarter, so it's not clear to me whether they're going to meet or beat Q3, but it doesn't really change my view on the company going forward. My hunch is that it does beat Q3, but I don't have a strong conviction in that. And even if it comes in 20% lower, it doesn't change my thesis. Another potential catalyst is, we've seen this over the past year, the potential for future social unrest or safety concerns. Even the riots at the Capitol, if you look at Mace's stock price chart, it went up 20 or 25%. I wouldn't think that would drive people to buy pepper spray, but whether it be retail investors or algos that just see, okay, Mace is correlated with this and it moves up. So I think that any potential future social unrest is probably going to benefit Mace. There's a potential uplisting in the, there's no immediate plans for an uplisting. They're on OTCQX now. Okay, yeah, X not B. And they were on NASDAQ 10 years ago. And then lastly, I don't ascribe too much to this, but given the size and given the ubiquitous brand, if my background, I did M&A for 15 years, I would want to buy this. Whether I was a gun manufacturer, maybe a private equity company that says, hey, look, I can buy this thing at less than 10 times earnings. Well, with a premium, you wouldn't be able to, but this would be something that I, as a principal, would want to buy. And so I think, in that sense, it's a potential takeover candidate. It wouldn't take much. Sentiment, there's not really much that's positive out there. It's got sparse coverage and very little attention, despite Mace being active on conference circuits. They were at LD Micro, StockTwits, and I'll pull up a couple of screenshots here. So they've got, actually, I'm just going to pull up the web page. So they've got only 146 followers on StockTwits, and the last time Mace was mentioned was in 2015. There's one Seeking Alpha article in the last year by Andrew Shapiro, whose fund, I think, is Lawndale Capital Management. He participates in earnings calls. He has been very, very, very vocal on social media, both on Seeking Alpha and Twitter, about how excited he is about the business, and I concur with him. He's got a fairly limited following, and so it hasn't had much impact on the stock price. Twitter mentions, you can see, you search here, and it's a lot of, well, here's Andrew. There's just not a lot here. Reddit, you go to penny stocks, Mace. Move this. It wasn't even mentioned. There's a list of penny stocks under $1. You go to investing, there's nothing. You go to trading, there's nothing. Maybe there's some restrictions on OTC stocks there. And then I had the StockTwits page pulled up, but nevertheless, very few followers on StockTwits. So I'm going to hit a few points here. You all probably haven't seen their website before the rebrand. It was pretty abysmal looking before this. You can see here it's powered by Shopify. So over in the last, I think it was 2 months, I think they did this in December, complete overhaul of the website, much, much easier to use. I did some test purchases. Unfortunately, you can't buy pepper spray or stun guns in New York State, and so I had to buy a personal alarm, but smooth process. And they're really building out the sort of story here. So self-defense products for women. They've got how to use it videos. They've got testimonials from people about, I was out jogging and I'd be dead if it weren't for pepper spray. So they did a great job rebranding the website. This is an investor presentation that they put together at their annual investor day. I think it was in July of last year. I would encourage people to read it. I'm not going to read it word for word, but there's, since I didn't do my own presentation, I'm going to borrow some of it. This is their current product lineup. They are, They have been increasing the number of products they have. I don't think they're going to do any like dramatic innovations or unnatural acts to get into other lines of business. It'll be more sort of natural extensions of what they already do. Brand awareness, you can see here, 80%. I'm not going to go through that. Their current sales distribution, it's about half retail, a quarter of it's private label, e-commerce, and what they have indicated, and which and I have a reasonable degree of confidence in, is that e-commerce is going to grow. We are the brand. They talk a little bit about addressable market here. 128 million households in the US, and penetration is quite low. Insight survey. And then I mentioned before about rebranding to focus on consumer, to focus on consumer rather than, more law enforcement and commercial that was focused on a few years ago. You can see from the colors here, it pops. And so because they also sell through retail, they sell at Walmart, they sell at auto parts dealers, this really pops. So if you're in an AutoZone buying, brake pads or whatever, maybe you've got a, daughter at home or a wife, or, maybe you just want to protect yourself. This is something that really stands out. And so it's not, with a gun or other sort of personal safety item, you've really got to make a concerted effort to buy it. This is more of an impulse purchase, or it can be more of an impulse purchase. They talk in this presentation about what they plan to do on their branding and marketing strategy, and I'll go through the financial. Well, let's go to the charts. If I can click on them. So this is the all-time chart here. It's pretty ugly, as you can see. This goes back to 1994. If you look at the 5-year chart, they've been one of the flatter, and obviously there's a big dip here, but one of the flatter 5-year charts that I've seen. And from going back through past earnings calls and their financials, they're in much better position than they were 5 years ago, in my opinion. And then if you look at the 1-year chart, you can see here the volume really ticked up around the time of social unrest. I think this is probably me here buying, well, one of these two is me. And you can see the volume is, a lot higher than it used to be. The candles aren't as wide, and it has gotten more legitimacy and attention from investors. I'm not a technical analysis guru, but when I combine what I know with the company fundamentally with what I see on the chart, I like it. From the riots, well, post-election and the riots alone, it moved up from below 40 cents up to 50 cents. Came back down, and is now for whatever reason back on the rise. And so as an investment, I really like it. As a trade, any potential future social unrest, I think there's a good chance that the stock would increase. That's my opinion, at least. I mentioned Seeking Alpha. This is the only article that's been done in the last 3 years. I would encourage people to read it. Andrew's very bullish on the company, as it says here, and it's a pretty good background. And I would say that his and my viewpoint are pretty similar. Spend a moment going through financials. So this top chart here, or this top line here, this is their quarterly revenue. The red is their adjusted net income, and this light blue here is their adjusted EBITDA. And I want to call out a few things. Clearly, this is a good trajectory, on the revenue side and on the EBITDA and net income side. And this was even done with the backdrop. We saw before 50% of their sales are in retail. And so in Q1 and Q2, despite a lot of retailers being closed, they grew their revenue, and they grew their EBITDA, and they grew their net income. So they have certainly benefited from social unrest. I believe that a lot of that has been masked in their historical performance by the fact that we're still in the midst of a pandemic. And I think that as more people get out to stores, you'll see more. I would expect that you would see more retail purchases of Mace. So they've gone from, call it 2.8 million in revenue in the first quarter largely unimpacted by the pandemic, probably a small amount, but they're selling to retailers in the stores, and so that wouldn't have impacted it too much. But Q2, there was a meaningful headwind from COVID, and despite that, they still grew, and they grew their EBITDA and net income here. And as I mentioned before, they don't pay taxes, or they have a net operating loss, and so when you look at EBITDA, it's quite similar to net income. It's fairly low capital intensive business, and so there's not, there's not much depreciation or amortization. They do have some intangibles on their balance sheet that I think are amortizing, but it's not much of a difference here. And so the adjusted, at least according to the equity data terminal that I use, their adjusted net income in Q3 alone was $860,000. So if you annualize that, I think that's 3.4 million, or no, it's even more than that. It's 3.4 million. You annualize that's 3.4 million, market cap's 27 million. Is it possible that Q3, do I think it's possible that Q3 was their best quarter? Yeah, I think it's possible. Even if it was, I still feel very comfortable in my investment, but I have a lot of faith in the management team. And I believe that they, if not in Q4, but next year, that they will continue to grow, not only top line, but improve on their gross margins as well as their operating margins. And I'm going to share with you here. This is from, they've used this slide here in a couple of presentations that they've done, but this really talks about their key priorities. They've made tweaks over time, but a couple that I want to highlight here that really show how focused they are on both operations, but also branding and marketing. Lean out non-value add processes, advertising awareness and IR investment. That's in the short term. In the midterm, reducing process steps by 30%. So this is not just we're going to improve expenses. We have a plan. Drive minimum 200 basis point increase in gross margins. Land a minimum of 4 new retailers. I can't remember when this was put together. I think they've disclosed 2 of them so far, or but in any event, their plan was to add 4 new retailers and to continue to add. Increase direct to consumer by a minimum of 3x, investment in direct to consumer and AI, new products and product line extensions and licensing deals. And then in the long term, here they talk about acquisitions, which, in a world where you've got, where you have a large NOL, this is incredibly valuable if you can structure the deal right. New products and extensions, continued channel addition and retailer penetration, automation, international expansion. I'm not familiar with what their, and they haven't really discussed it. I'm not familiar with what their international plans are. So I'm viewing that as, potential upside. They do sell some internationally right now, but it's a very small number. And then again, expanding personal safety device offerings. When I first invested, they talked about wanting to get EBITDA margins to 15%. The last quarter, they're already above 15%. It might have been LD Micro, but on one investor presentation that they did, they talked about increasing their operating margins or their gross margins by what I thought was an eye-popping number, up by like 8 or 9 or 10%. And the CEO had kind of looked over at the executive chairman and said, I know some of us believe that we can get to this number. The CEO is not really a promoter from what I've seen. And so I think there's a good chance. I personally have a lot of faith in their ability to do that. Whether they hit that number or not, I'm not sure, but I do believe it's legitimate and I do believe that it's possible. I mentioned their website. If you scroll down here, they've got 2006, their annual meeting presentation. The business looks a lot different than it did then. They were in business to business, video security, and they've really narrowed their focus. So their website's a treasure trove of information. On the financial side, one other thing I want to mention on the financial side, I have some contractors that I hire overseas and had one of them take a look at this and build a model. And I said, I don't want to tell you what I think of it. I just want you to put it together and you tell me what you think. I actually did that with two people. One of them said, I kind of like it, but I don't like their cash flows. The cash flows aren't falling to the bottom line. And so I think for people who are screening on cash flows, they're going to be really surprised because when you grow revenue as quickly as they have, it doesn't fall to the bottom line in cash flows quickly because you've got to build up. You're using working capital by building up inventory. You're not getting paid by your vendors immediately. And so I think cash flows will begin to match and potentially exceed the earnings. I've got their balance sheet here. I mentioned, I think it's about $4.5 million in tangible book value, total assets of 12. You can see their total debt here of $990,000. My recollection is that they paid down one of their, actually, I think it might have been their only non-PPP debt and replaced it with a $2 million revolver with Fifth Third Bank about a month and a half ago. I think it was LIBOR plus 2%, if I recall correctly. So, that's, I'm not a debt guru, but for a company of this size, I think that's a pretty good rate. And I actually used to work at Fifth Third Bank, and they're fairly conservative underwriting. So that gives me even more confidence that I've made a good investment here. See if there's anything else that I want to highlight before I open it up for questions. Oh, this is put together by the management team. And when I talk about being pretty transparent and open, there are some companies that do this, but I don't see a lot of companies that are talking about their weaknesses in such a direct way. And so that gives me a lot of confidence, not just based on this one slide, but the totality of the picture. Trust is a big part. Trust and management is a big part of my investment thesis. I like to validate that the management team is trustworthy up front, and then once I prove that they are, I'm going to generally trust and believe them. And the moment that I don't, I'm out. I think that probably covers most of what I wanted to talk about. I'm sure I've missed a couple. Oh, you know what? I'll just show the insider holdings here. This is their management team, or these are their insider owners. There's a couple of hedge funds that have meaningful stakes, and I presume there's some retail investors. I can think of one that have single-digit percentage stakes in the company. So with that, I can open it up to questions.
Great. Thank you, Greg, for that presentation. I got to tell you, that's one of the best presentations we've ever had in terms of the comprehensive approach to your research and integrating the 4 pillars. I really enjoyed it. I want to thank you. We put that concept out there of what a story trade is, using the 4 pillars of fundamental, sentiment, catalyst, and technicals, and you went with it, and I really appreciate that. Just on the basis of that, I'm looking forward to your future presentations. So really, thank you very much for the effort you put in. I really enjoyed that. So let's open it up for any questions. You can raise your hand or put it in the chat room. We got one off the bat here from Chris Hampton. Do you have backlog figures, and how have they changed over the last few quarters and years?
I don't have backlog figures, but on the Q3 earnings call, it was around the same time actually that the CEO reminded investors that Q4 tends to be seasonally weaker. They talked about their backlog being, I'm trying to remember the exact word. Let me see if I can find it here. Yeah, he said we have 2 new products. Yeah, we have 2 new products placed in key retailers that are doing very well, and new products introduced in retail that continue to strongly outpace their own forecast coming this year, and very robust backlog heading into Q4 this year. So I don't have the figures. My memory is pretty bad. I don't remember them disclosing backlogs, but again, this sort of, for me, this kind of gets into trusting management. Probably 10 or 15 claims that they've made that were verifiable over the coming quarters. I sort of wrote down and checklisted against them, and they've not missed one of them. And I've seen no evidence of missing any of them. And then, I'd say about half of them, it's like you can check the box. They said, we're going to hire a CFO. They just hired a CFO. They said they're going to overhaul their website. They overhaul their website. They said they're going to hire this consultant to do this. They said they're going to do this. And so they have told us what they're going to do and continue to execute. And on that basis, I can't put a number on very robust, but the CEO has not, in the 3 quarters since I've been invested, has not overstated anything. Knock on wood that continues.
That's great. I really like that analysis you did. I did a similar analysis on Dario before I invested. I did the same exact thing, went through all the transcripts, and I wanted to make sure they were honest. So I value that as well. That's great that you did that. All right. Any other questions? You can go ahead, raise your hand, or Rob is on over here. You can jump in if you'd like.
Yeah, I think Greg Fisher's presentation was way too thorough. He answered almost every
Right?
question. So it's hard to ask anything about anything. One question about the Mace brand.
Mm-hmm.
So this company was a NASDAQ at one time. Did
Yep.
people lose interest in the Mace brand? Did the company struggle and now it's doing better?
So it's been a long time since I looked at this, but my recollection, so clearly they had some financial troubles. You can see in the historical stock price chart. The thing that really stuck out to me, because I saw a chart and I said, what the hell happened? They were doing a lot of different things, like, and I mean, if you think about the name Mace Security International, it's not a very consumer branded or consumer focused name. It's, it seems like more of a business to business name. And they were targeting to sell more into law enforcement channels, and which are going to have lower margins. And they also they bought a security video business. And if I looked at a presentation that they had done on it, you just look at it, it's like you're using dated equipment. And so I can't give a great answer to that other than the business today is much more narrowly focused than the business previously. And the great thing about their website, obviously these things exist anyway, but the great thing about their website is it's like a time machine. You can go back and see, what the hell happened, and going back to, they got press releases from December 1998, going back to December 1998, and somewhere buried in here is information about some of the struggles that they had in their business back then. But the business today looks dramatically different from, some of the products are the same, but the consumer focus and the people running it are very different. It's an entirely new team. I don't know if there are any holdovers left. I'm sure some people in the organization, but executive chairman, CEO, CFO, I'm pretty sure the COO are all new.
Sounds good. They still have the strong brand name, so if they can turn it around and become profitable, they're good. There's another question from John M. I'll ask to unmute him.
Hi, great presentation, Greg. I'm just curious about the potential of them uplisting. You mentioned that there is that potential, and I'm wondering, have they mentioned anything about it? And also, when they file, do they file in the with the higher level accounting required? Should they uplist? Do you know about that? Or?
There was a question, and I can't remember if it was on an earnings call or in an investor conference, about a potential uplisting, and the response wasn't, yeah, we're going to uplist, but it was more of a, yeah, it's something that we consider in the future. I mentioned the uplisting less as a, it is imminent, and more of, it used to be NASDAQ listed. The stock, in my opinion, I don't even need to make a qualitative assessment. You can see the valuation multiples that it has, and the financials that the level of disclosure that they have and the financials that they disclose are, and the performance are, in my mind, conducive to an uplisted company. There's no reason to believe that that's imminent. I mentioned that as a potential, long-term catalyst. This is one of the few stocks that, I actively manage my portfolio. I'm constantly adding and trimming. This is probably the longest holding. This is the longest holding that I have. This is the only stock that I've owned for more than 9 months. And so I'm viewing this for me as a long-term holding. And so, in 2-3 years, if they continue to perform, then an uplisting it potentially is on the horizon. To your second question, I will be brutally honest here. I am not intimately familiar with each of the different disclosure requirements for, exchange listed versus the QX and the QB and the pink sheets. But the level of disclosure that they file, it doesn't, to me, look like they would have to do a whole lot more. And they did just hire a CFO, let's say like a week ago. Not a week ago, about 3.5 weeks ago. So they've hired a new CFO whose background, interestingly, is he's got a lot of acquisitions experience. So, maybe that's a signal of, some of the things that they may have planned on the horizon. So I didn't mean to suggest that an uplisting is imminent. I just think that is a potential future catalyst, just as a potential sale is a potential future catalyst.
Okay, thanks. And do they have, from what I've seen, they're big into retail, and they seem to be doing a really good job with that. Do they have many contracts with law enforcement or any military contracts or anything like that?
So I'm not sure how they have the military, or I'm not aware of military. They do have some law enforcement business. It's a small percentage, and the CEO has guided that he either said or I inferred that would continue to be a smaller part of their business, and that they're focused on being consumer branded. On the one hand, the more you sell, the better. And so, I would like to see them selling into as much as possible. But as I mentioned, I have a lot of trust and faith in the management team. And so, if they go big in the military and law enforcement, I will back them, or, I have no choice. But I will view that, whatever they decide to do, I'm at a point where I would view that as a positive.
Okay, thank you. I don't have any more questions. Thanks.
Thanks, John. And then John S. has some questions.
Hey, Greg, can you hear me?
I think so.
Okay, good. Nice job on the presentation. Question, looking at the gross margins and then looking at EBITDA margins and so forth, it looks like, and this is kind of like Ammo Inc. in that being on a lower exchange, it's good you've got a relationship with, because it's a little harder to find information sometimes with traditional systems, but it looks like gross margins maybe went up 33 to 37 between the last 2 years. And then it looks like, aside from that 4% change there, are the main EBITDA margins and most of the net margins that mostly went up from the reduction of debt and cost of debt. Would that be fair?
So on margins in general, well, I'll break it into gross margins and operating margins. So on a call, I just want to double check this and make sure I'm not. Okay, yeah. So on a on an investor presentation or investor conference, they're at, so what are they at, 40 now, 41?
45 maybe at the close.
Yeah, so the CEO mentioned that they would, that there are people who believe that they can get to 50% gross margins. And with the implication being that that's like a stretch, and maybe it seems like you're not going to be able to do that. But he and the executive chairman both said that, you know, they're shooting for that and they believe that it's possible. So I have no, inside information. And so I don't know whether they're going to get to 50 or not, or what their internal plans are. But my expectation would be that, you know, based on that comment, as well as their focus on, you know, reducing process steps, they've also, so they've significantly increased the number of shifts that they run. And on the last earnings call, someone had asked, like, well, are you thinking about adding another shift? And they said, well, we're really focused on margins. We want to make sure that we are maximizing and optimizing, I'm paraphrasing here, before we add a second shift. I think he said we're already at 20 hours a day. So let's make sure we've got gross margin. Let's make sure we've got margins that we're optimizing before we go to 24. So I think the most leverage, and, you know, I've got a valuation model. This is not surprising for people who build valuation models, but the most leverage to the bottom line is in gross margins. If you can take it from 40 to 45 or 50, that's huge. On the operating margin side, debt expense reduction, it's a small number. They will realize some, I believe that they will realize some in the first quarter, and then I'll see that in the P&L. It's not a huge driver. They didn't have much debt to begin with, but going forward, you know, that'll be a lever they can pull. And then, you know, some of their fixed costs and overhead, they're also focused on, you know, they're focused on reducing expenses across the board. I think I expect to see those fixed costs and corporate overheads as a percentage of revenue decline. That also is not, you know, that's not as much of a needle mover as it is on gross margins. And so the hope would be, my hope is that they continue to execute, that they are realistic about what they're capable of, and that they continue to grow revenue. Because if they're growing revenue, even if they're not able to reduce the number of process steps, or, you know, even if they have to add a shift, you grow revenue. As long as you're not having to build a new factory, you ought to see gross margin expansion.
Right. And the 2% rate, 2 plus LIBOR, is pretty bullish. That seems that Fifth Third looked at them and felt we're in pretty low rate environments, but that's pretty good. But are they looking to increase margins too by focusing more like on an e-commerce higher margin and maybe de-emphasizing the lower margin business? Is that the other way they're looking to get higher margins?
Yeah, so they've talked about, you know, they've I don't remember specifics, but they have talked about on, you know, past earnings calls and in conferences about growing margins in general and focusing on higher margin products. Now, you know, it's tricky because you've got to strike a balance. So they have the Mace brand, which is a premium offering. And those are going to have the highest margins. They also have actually more than one other brand, the most prominent of which is Tornado. Tornado brand pepper spray is, you know, it's sort of down market, maybe costs, I think its price point is like $2 lower. So their margins on that are lower. And, you know, depending on the mix going forward, you might, you know, you could have margins, you might have gross margins go up or down depending on the mix of those. But my hope or my expectation would be that if they're effectively managing the business, that even if their gross margins go down, that they are still growing the overall dollars of gross profit.
Okay, and right now I'm trying to find companies that can pass on like COVID or inflation, any company that can pass on increases, and it seems like all prices are going up. So I'd imagine they could get some gross margins just by doing the status quo price increase. But I definitely think it's an attractive time to own companies that can pass on prices with where we are. But
Yeah, that's a great call out. There was a question on, I believe it was the Q3 earnings call about gross margins and about margins, and whether it's because you're increasing prices or whether it's because you're taking out expenses or just scale benefits. And the response was, the response was that we have not done price increases since either the beginning of this year or last year, and so none of its price increases. So to that point, if you've got a strong brand, this would be speculation, but I would agree that if you've got a strong brand, and you would be better positioned to pass along cost increases. My understanding is they have not done that yet. We'll see what Q4 brings.
okay, that's all my questions. Thanks, Greg.
You're welcome.
Okay, thank you. I think with that, we're going to go a little over time more than I thought. So we're going to end it here. Thank you so much for that presentation. We can continue collaborating with Greg over in the Mace Research Group, which was just opened. Greg, if you want, you can find your way there. The link is in the VIP investing room. Great. So thank you very much. We'll continue collaborating there. Now, I just want to point out our future events coming up. Again, you can go to StoryTrading.com, click on events, and what you'll find is this weekend, 9 p.m., we have Dan Carlson presenting a new pick to our community, at least, and Aaron Warwick presenting a new pick, followed by Jonah Lupton next Wednesday, Richard Chu next Sunday, and then Mark Gomes the following Wednesday on an interesting topic, asset allocation and portfolio management strategies. So if you're not a VIP member, hop on over to StoryTrading.com, click that VIP upgrade button, and we'll see you in our community. Thank you very much.